Very good morning to all our viewers. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. And as today is the last day of the week, it's going to be a learning Friday for you as we get to you the Buy Now, Sell Now Pathshala with Kunal, Bothra. So let's get started. But first, let's have a look at what the markets are up to. So Cheryl, a decent start for the Indian markets, but we have cooled off from the opening and the day's highest point as well. But nevertheless, we are trying to tell the viewers that how markets are volatile with the color of the markets that we have.
Absolutely. Good morning, Shrishti. In fact, I was going to say that we are actually wearing the colors of our show. Buy now, sell now looks like it because you're wearing green and red also. But yes, the markets have been pretty volatile of late. I know that Kunal will not concur with me on that particular terminology, but given the way how the markets are performing, like Shrishti mentioned, we did open with a very firm footing, but we've given up most of the gains when it comes to Nifty Bank. If you look at Nifty Bank right now, it's trading absolutely flat. It's just nudging towards the negative territory. Remember, it has cooled off approximately 1% from the day's highest point. So that is Nifty Bank for you. You have markets also. The benchmark indices that are trading with gains of about 0.4%. This is actually compared to gains of about 0.8%. That's where they opened up. Talking about which are the gainers on the Nifty today, you have HCL Tech, Infosys. They are ruling the charts on the Nifty, top Nifty gainers. You have L&T, Coal India, as well as Tata Consumer that's holding on to good gains. But on the flip side is ITC. A lot of pressure is seen on that particular counter. 2.3% downtick coming in for ITC as we speak. BPCL, Aisha Motors, as well as Bharti Airtel are some of the other losers. But one thing that you can take solace into or respite is the fact that the advance decline ratio is still in the favor of the advances. But talking about the sectoral indices is the Realty Index that is marching ahead today. The top sectoral gainer gains about 2.3%, followed by IT Index as well as metal. They're seeing good gains. But on the flip side is the FMCG Index, that's the top sectoral loser. Actually, along with that, you have PSU Bank Index also that is seeing some sort of a decline in trade today. But yes, Shrishti, looks like it is going to be another day where we will have to wait right up till the last closing bell tick to know which side of the fence will market shut shop, because right now we're just drifting a bit lower, isn't it?
Well, yes, absolutely. Let's wait by and watch. But let's move onto the show. And onto the show, it's time now to get you Buy Now, Sell Now Pathshala. And let's go quickly across to Kunal Bothra to understand which interesting topic he has got for our viewers today. Over to you, Kunal.
Thank you, Srishti, for that, as well as good morning to you, Cheryl. So, today's topic is more of a continuation of what we discussed last week. On the Nifty trend we discussed last week. So today I'm taking the topic of Bank Nifty trend, and it's always good to have some learning, some earning with learning as well. So that's why I've picked up the topic on the recent trends for the Bank Nifty. Now, two important observations which are actually coming across on the Bank Nifty. One is that we understand the broader structure of the trend. The trend for the Bank Nifty is very similar to what happened to the Nifty from the December top of 44,000 approximately. The Bank Nifty has been consistently taking resistance as well as support at this major channel pattern. So as you can see that from 44,000 levels, the Bank Nifty fell into a corrective mode. We came back towards 41,000 approximately, rallied back towards 43,000, again coinciding with the top of the channel pattern over here, and then going into process of bounce continuation. Now the reason why this is very important is because we've come back to the lower end of this channel pattern this time around, and the lower end of the channel pattern at least in the last three such instances indicate that the markets have gone to a decent bounce, and this is a span of 7 to 8 trading sessions. So even if we try and calculate from yesterday's closing, and assuming if we don't break below the 38,500 mark, which was formed yesterday, we could go in for a bounce on the Bank Nifty in the next 7 days. Now this also coincides with one of the most important observations which we look out for in terms of indicators. And we try and compare this with the last 1.5 odd year, that when the indicator changes its behavior, that's where we say that the markets have changed the trend. Now this is the simple RSI which I have plotted on the charts of the Bank Nifty over the last 2 years approximately. Now the most important pattern is that the RSI has always gone into a bounce whenever the indicator has come back towards a level of 40. So what I've done is I've drawn a very simple trend line at this 40 odd mark for the RSI, and in phases of sharp correction, this was 2021 where the markets first started to get into that corrective phase. The RSI halted at this 40 odd mark and we got into the process of a bounce. Every subsequent correction was absorbed at the zone of 40 RSI, and the markets did not change the behavior. So, which means in effect, the rally which started off from 2020 lows, the behavior of the rally is very, very same and is consistent. Right now, we've exactly hit that 40 mark, which is this trendline support. So, in case if you manage to bounce off from here, we are looking at a continuation move on the Bank Nifty. So, both the observations indicate that the next 7 to 8 days we should be playing for a decent bounce on the Bank Nifty, and hopefully not so volatile days ahead.
Hopefully, not so volatile days ahead, and we should hopefully see a bounce as well. But Kunal, you said that if we don't break below 38,500 levels, then we are likely to see a bounce back at least till the 40,000 levels for the Nifty Bank. But what if we do break below that 38,500? Then what is the next support level?
Well, I think if we break below the 38,500 mark, and assuming if we have a weekly closing, which we can establish only next week, then I believe that the chances are that the markets can go into a much sharper correction and probably reverse the trend which started off from 2021. So, till 2021 and the correction so far, we've just gone through a phase of correction. We've not gone into a bear market phase as such. So, if we break below the 38,500 mark on a weekly closing basis, then I believe that that trend can change significantly.
That's the analysis on where Nifty Bank trend is trending and going ahead. Thank you so much for that, Kunal. Sorry for putting you in a spot though, but fingers crossed that hopefully we will not break below the 38,500 mark for the Nifty Bank, and from here on we only strengthen, and hopefully this bounce sustains going ahead. But on that note, we slip into a break on this edition of Buy Now, Sell Now. Remember viewers, we are facing some technical glitches on YouTube, so we are not live on YouTube, but you can definitely write to us on the WhatsApp number that will be flashing on the top of your screen throughout the show. So do write to us your queries there, and we'll be back and we'll take your queries. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. We are live on Twitter as well as Facebook, or you can write to us on the WhatsApp number that is flashing on the top of your screen. Do remember that you should also mention your name while mentioning the stock name that you are looking to invest in. If you've already invested, then mention the buy price as well as the quantity and the time horizon that you're looking to hold a particular counter, because with that, our experts will be able to help you better. For a quick note for all of our viewers who are trying to log into YouTube and connect with us via YouTube, we are not live on YouTube. So you can write to us on WhatsApp, or you can watch us on Twitter as well as Facebook, and also on etnownews.com. That's our website, so you can catch us live there as well. But with that, let me kickstart the show with our experts. I have Kunal Bothra as well as Vijay Chopra joining us this morning. A very good morning to you, Kunal, as well as Vijay. Thank you so much for joining us on Buy Now, Sell Now. And Vijay, let me come first to you. Markets flip-floppy of late, actually quite flip-floppy. If you look at today's move also coming in for the markets, we are pairing all of those morning gains. In such market scenario, what should retail investors do to make sure their wealth is protected?
Good morning. Thanks for having me on your show. One thing which is, implementable in good markets and bad markets is that you chase value and not valuation. So if there are investors who have chased valuation has eroded. We have seen all the new age internet companies and many other new IPOs, which have corrected 50, 60, 70%. But again, the value stocks, for example, a company like, Power Trading Corporation or PFC or an ITC or, many other NTPC, even, companies like BHEL, SAIL, Government of India companies, they have not corrected that much. And they still hold the water. So I think that, you should chase value and not valuation. There are scores of companies which are available at a good valuation and a value. And these are good dividend yielding stocks. I will just give you an example. A company like Chennai Petro, it trades at a price to earning of 1. So why to go here or there? It's a Government of India enterprise, investments from Government of Iran as well. And IOC is one of the shareholders. So, I think that these type of stocks are great, investment picks. You can hold on to these companies for a long, long time. So I would recommend that be in very conservative, very good cash flow companies, zero debt companies. That's the idea. Chances of losing money is very low. And at this point of time, I think that, IT has already seen a major correction. So if you want to be, you can be in IT. In the top rung pharma companies also look very good. And yes, FMCG selectively looks also very good. And once we see the interest rates coming down, I think all the interest rate sensitive companies would look good, including real estate and auto.
Okay, so that's the take coming in for all our retail investors with sectors that are looking good right now to Vijay Chopra. But let's move on and kickstart taking all your stock related queries. And taking the first query from Venu Gopal Reddy. And Kunal, let me come to you for this one. He wants an advice on Infosys. He already has over 100 shares at a price of 1750 rupees. Yesterday we saw good moves coming in on Nasdaq, and today majorly all the IT counters are holding strong. What's the take on Infosys, and how much time it can take to reach back to his entry price?
So first things first, I think on the IT pack, I would believe that it's a good time as well as a zone to try and buy as well as accumulate or add these IT stocks depending on what's your initial positioning. But I would believe that I think TCS and HCL Tech have been the two prominent names which have actually done pretty well. Infosys is going through a correction as of now, but then when I look at it over the long-term timescale charts, these large cap stocks, they have a phase where these stocks underperform, and another phase where these stocks, they play a very strong catch-up with respect to the other peers. So I believe Infosys is going through the first phase where it's underperforming with respect to the other peers, but then sooner or later the stock would get back into a recovery or a very strong recovery phase. I would believe that it's a good time where you should look to average if you're on a long-term time horizon for Infosys.
All right, this one is coming from Hemant, and one more question coming your way, Kunal, because he's asked me specifically to ask you this one. And he wants to know what's the best price to buy into Power Grid, and also best price to accumulate Chennai Petro, which he already has in his portfolio. I know that we just speak about that particular counter, but he has Chennai Petro 100 shares at a price of around 300 rupees per share.
So starting off with Power Grid, I think at current levels you can look to buy the stock because it's just given a very recent breakout. I think 227 was the breakout point for Power Grid. It is trading 2% higher from those levels, and my sense is that the stock generally doesn't go significantly below its earlier breakout points, and the trends are very smooth and stable on the upside. So I believe slowly, gradually, you could see the stock moving up higher from current levels. So I think you should look to buy at current zone rather than waiting for the stock to come back towards 225. For Chennai Petro, on the other hand, I think again, even at current levels of 255, it's a good level where you can look to buy. Over the last I think 6 or 8 months, the stock has specifically gone into a decent rally, retested the previous highs of 255 approximately. And I think now with the second or the third retest for the stock, there could be a higher chance that the stock may break out. So again, a stock which I think you should look to accumulate at current market prices.
Okay, moving on to the next one. The question is from Ajay, and he's a senior citizen. And Vijay, taking this query from you, he's a long-term investor and he has already invested in Happiest Mind 100 shares from a price of 1195 rupees. He's sitting at a loss. What should he do now? Exit or still hold to this particular counter?
Well, I think that now this stock has shown a complete breakdown, and there are other companies, good companies available in the IT pack. I think that if he wants to stay in the IT companies, he should pick up TCS, he should pick up Infosys or HCL or even a Coforge. So these companies have a better possibility of running up than Happiest Minds. Mind you, that whenever there is a downturn, so just for data sake, I'm trying to focus on whatever has happened in the banking space in Europe and US. Most of the revenues come from the BFSI space for the entire IT pack, and BFSI space particularly is going to be under pressure. And if at all the orders or there are going to be certain order flow from Western countries, the top companies would latch on to it first, and then probably the second rung companies would get such orders. So I think that better to be with a TCS or an Infosys, which are better placed as of now than Happiest Mind. So you should try and exit on rallies is the call.
It's coming from Vinay, and he's writing to us from Mumbai. Kunal, he wants to know if it's the right time to buy Reliance Industries. Do you think that the selling pressure on Reliance Industries is done? You can enter the stock right now, or you should wait for some more time?
I would technically believe that you should wait for some more time because the stock has just broken below a major support of 2300. So, we were earlier flagging off that how 2300, 2250 is a major base for Reliance Industries. But this time around, this month so far, the weakness for the stock has led to a correction into below this very important support zone for the stock, which the stock has been holding on for the last, I think, 1.5 odd years from 2021 second half when the stock managed to break past about those levels. So there is a definite change of behavior for Reliance Industries, and I think it always makes sense to wait out, for a confirmation that in case if the stock reverses back on the upside, that's the time where you should look to buy. So as of now, I would suggest to just wait out for some more time, let the stock stabilize or let the correction stabilize. In case if it does, then maybe buying back about 2300 point could be a good risk reward for Reliance.
Okay, so that's the day coming in. But Kunal, just to follow up, actually, Papali already has Reliance and he's sitting at a profit in this particular counter. He entered this counter at a price of 2164 rupees. He wants to accumulate more and his investment horizon is for the next 2 years. So your advice?
Well, again, I would suggest to just hold on to your existing quantity. So as I said that possible that the stock may not correct sharply and get into a reversal mode on the upside. But I think whichever way, 2300 levels and above is a confirmation zone for Reliance Industries in terms of the technical chart. So once the stock crosses about those levels is where traders as well as long-term investors, then they can probably come back into the stock and look to buy the stock.
Okay, this one is coming from Dave. He's writing to us from Chennai. And Vijay, he wants to know whether it's right time to accumulate E-Mudra and Bata. E-Mudra, he's holding 100 shares at a price of 303 rupees per share.
Well, eMudra has seen a lot of price destruction, and I don't think that any stock which has shown such kind of a price destruction should be bought. As I mentioned earlier, so there are good options available. So as I said, Chennai Petro seemingly looks good. Look at good pharma names like Divi's, and Dr. Reddy's, and stocks like Sun Pharma. They are trading near the 200 DMA. Even Cipla post correction looks very good. So no point of destroying your wealth. So eMudra is a strict no. Which is the other stock?
Vijay, Bata was the other stock. Bata.
Yeah. So, again, Bata is a classic consumption stock, and as far as the as I see, the charts don't look that good. So I would say that just wait for some time before getting into a Bata. And probably we might see lower levels. So I would not recommend buying Bata at these levels. I've been mentioning several stocks which can be bought into.
Okay, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back and we'll be taking more of your stock related queries, so stay tuned. Welcome back to Buy Now, Sell Now on ET Now, a show where you get all your stock-related queries answered by the experts. And continuing with the same, which are coming to you for the next one. The question is from Vinod from Dubai, and he wants a long-term view on two stocks. Firstly is Lakshmi Organics, and the other one is Associate Alcohols. Do you track both of these counters, and would you advise for a fresh buy in any of these names?
I think that all the specialty chemical companies had taken a huge beating because of the high input costs. But I think it's been almost over a year these companies have been dealing with a lot of pressure, and now we are seeing that the EBITDA and the EPS both are looking good for all the specialty chemical companies. So Lakshmi Organic definitely is a buy at these levels, buy and accumulate. So for sure you can get into this company. The second company you're mentioning is Associated Alcohols. The alcohol companies have been facing one problem. The problem is high ethanol prices because, the government has started ethanol blending. Now the target is 20%. So while earlier that ethanol was available very cheap, now all the sugar companies are getting very good price for ethanol. So, and that's the reason why all the liquor companies are facing a lot of pressure on the bottom line. As ethanol prices have gone up considerably. So I think that better stay away. There are bigger companies. United Spirits looks very good, and so does United Breweries.
This one is coming from Nishit, and this one is for you, Kunal. He wants a view on LTIM. Average purchase price is around 4,400 rupees per share. He was looking to hold on to for the medium term. Do you think that it makes sense to do that?
Yeah, it makes sense to hold on to the stock, trading above the previous supports of 4,200. Even the current correction or the downside for the stock from 5,000 odd levels has not been very sharp as compared to the other mid-cap IT names. So the chart patterns are looking a bit more stable. Stock above that 4,200, I think it's a good time to hold on to your long positions.
Okay, the next question, Vijay, is from Jay Krishnan, and he's holding shares of Fine Organics from a price of 4,816 rupees. He's looking for a medium-term outlook in this particular counter. What will be your advice?
Well, as I said earlier, most of the specialty chemical companies, I think, either they are bottoming out or in the process of bottoming out. So there is a good possibility that this stock bottoms out around 4,000. So keep a stop loss of 4,000. And if at all it does come there, it would be a great time to average. So average it and, you can probably get out of the stock, in profit.
Right, this query I believe is from Jayadev. Just a quick note for all of our viewers who are writing to us. Please do mention your name as well. This one's come from Jayadev and he wants to know about LIC for the longer term. His average price is 625 rupees per share, about 200 stocks is what he's holding of LIC. What's your take on this one, Vijay? What's the future looking like?
Well, the problem has been Adani. So once the Adani air clears, I think LIC would start coming back on its feet. So definitely oversold. A good company all over, but again, due to the Adani fiasco, the stock has taken a beating. But I think that once this dust settles down, it will start going up. So my personal target for LIC is 800, but in the longer term. So just wait and watch. I think that this stock requires patience.
Okay, moving on to the next one. Kunal, the question is from Prakash and he's holding 200 shares of UPL from a price of 760 rupees. Currently at a loss, he's looking for a short-term view in this counter.
Well, it doesn't look attractive. The stock has been a big underperformer in the best of the last 1 or 2 years, 3 years for the markets, and I think at current levels the stock is struggling to hold on to that 700 mark. Formed a triangular pattern on the weekly, monthly chart time frame, and I think it's broken below the lower end of the support of this triangular pattern. So looks weak. I think on every minor rally, maybe closer to 725, 730, you should look to exit.
Alright, this one is coming from Vinayak Kinney and he has Jubilant Foodworks, 260 shares at a price of 580 rupees per share. He is looking to stay invested for the long term. Vijay, what's your view?
Well, I think that it would take time. It would require some patience. So I don't see any fireworks happening in Jubilant Food. So just if at all you want to buy a fresh, hold for some time. If you have already taken a position, then again a hold. I won't recommend adding the position at these levels.
Alright, let me take the next one then. This one is coming from Dr. Ravi and he's writing to us from Bangalore. 153 shares of Dixon Tech at a price of at a rate of around 3,100 rupees per share. For the long term, how does Dixon Tech look to you, Vijay?
Well, there's a lot of hoopla around the PLI scheme and Make in India. So I think that Dixon is one of the major beneficiaries of Make in India and the PLI scheme. So definitely it has the potential of going up to 3,700, 3,800. So yes, definitely a buy at these levels. And there's a gap also at around 3,200 which it's going to fill. So I think that it's a buy.
Moving on to the next one, the question is from Karthik and Vijay. He's holding shares of Chemplast Sanmar and the stock is already down 50% and he's also sitting at a loss. What will be your advice in this counter?
Well, I think there are better options in the chemical space than Chemplast Sanmar. I think that specialty chemicals should do well. But there are other companies which he can look into. So Sumitomo Chemical looks good. So probably he can look into a Sumitomo which looks better.
Okay, this one is coming from Rajendran and he's writing to us from Bangalore. Kunal, this one is for you. He wants to know about banking and power stock. One of them which look, one from each of the sectors which look good in the short to medium term horizon.
Tough one to just zero it down to one, but I think in this kind of a scenario, it's better to go with a private sector banking name. I would suggest ICICI Bank as a more formidable name over the long term. And from the power stocks, again, I think there are a lot of options, but I think Tata Power as well as Torrent Power, these are the two names. Tata Power apparently just around the 200 mark, I think looks attractive as a good value zone. So you can look to buy these stocks from the respective sectors.
Okay, Kunal, since you were talking about the private sector banking name, the question is from Mehul and he's holding IndusInd Bank futures from a price of 1,170 rupees. Currently at a loss, but do you feel that this month there could be recovery in this counter?
Well, I doubt so because I think right now this is a phase where the markets are going into a corrective mode as of now. Now, only if the Bank Nifty recovers like what I discussed earlier by in the next 7 odd days is where I expect IndusInd Bank as well to go into a recovery. But then I think the best confirmation which you should be waiting out for, simplest way, is to wait out for a point when the stock breaks past about the 2 day previous swing high. That's a sign that the stock trend has reversed. So I'll suggest a wait, maybe about 1050 levels is where you can do to average.
Okay, this one is coming from Sham and he wants to know about Asian Granito as well as India Bulls Housing Finance for a period of 3 years. Vijay, what's key to note is that he's making loss on both of the counters, 40% on Asian Granito, 20% on India Bulls Housing Finance. Do you think it makes sense to stay put with these names?
I think exit on run is the call. They should exit and get into some other more stabler company. I would recommend that you can buy a Chennai Petro.
Okay, Vijay, once again coming to you, Subramaniam is holding 20 shares of Talbros Automotive from a price of 295 rupees. He's just seeing that the stock is actually down in the past 1 month. So going ahead, how do you see this counter going? Will the counter give some more returns from here on?
There's a death cross on the chart. I would recommend that you exit on rallies and get into a JBM auto.
Okay, this one is from YK Rao. He's writing to us from Hyderabad and he has 2,400 shares of Samil Kunal, that's Samvardhan, Motherson, at a price of around 89 odd rupees for the last 7 years. Now he wants to know what should he do with this particular counter given the fact what is happening in the European economic situation, the financial market situation. Does it make sense to stay put with this one or look to exit Samil altogether?
Well, it's been an underperformer. In fact, last 3 or 4 months, the stock was trying to get into a recovery from 60 levels to almost 88, 90. The stock had rallied up to. But I think, since your buy price is around the 88 odd mark, I would suggest to wait out for maybe some more time. Because of the last 3 months of recovery, there could be some confidence which could be brewing in back into the stock. So possibly in the next attempt, whenever the stock at least gets back into a rally phase, I believe that a retest of this 88 to 90 odd marks could happen for the stock. So I would suggest a hold.
Okay, that's a hold coming in, but moving on. And Vijay, the next question is on Zomato. Krishna Rao is holding 3,000 shares from a price of 72 rupees. Is this a right time to add more for this particular counter? And he's a long-term investor, so your view?
Well, I think he can average at these levels and probably, there would be a good exit point around 70, 75. The reason is because recently the owner of Zomato said that soon they're going to be profitable as Paytm has become profitable. So if this is the kind of confidence the management is showing and there's an improvement in the quarter on quarter, they're making less losses. This means that profitability, can be around the corner. So I think that they can average around this time, this price.
Okay, this one is coming from Bharatwaj from Coimbatore and this one is for you again, Vijay. 130 shares of Wipro at an average price of 517 rupees per share. He's a long-term investor, but he wants to know, does it make sense to look to add some more of Wipro in his portfolio right now?
Well, I don't think so. He can diversify a bit. Wipro sooner or later would come up, but again, as of now, it looks he should have a very strict stop loss of 360, and keep on holding the position. Otherwise, Infosys and TCS look much better.
Now coming to you for next one, you were discussing about ICICI Bank. Actually, Shiva wants to know the possible target for the next 1 to 2 months. He's already holding 400 shares from a price of 840 rupees.
So again, not to look out for this as a very short-term bet because I'm of the view that the markets can remain a bit more volatile in the next 2 months. There could be a lot of news flow which could be flowing around. So you have to be a bit on and off when you're looking to trade these kind of stocks. But then my sense is that the stock has come back towards or it's coming back closer to a good value zone just around this 800, 820 odd mark. The last time around as well, the stock had corrected back in 2021-22. I think somewhere closer to 800 was a major support for the stock and the stock fluctuated at those levels. But then when the bounce happened, the stock made a fresh life high for itself above the 900 level. So again, tapping back into a strong support levels could probably invite similar reactions for ICICI Bank. So I would suggest a hold, but then your time frame has to be extended.
All right, just a quick note on what the markets are doing. Now we are sub the 17,000 mark as well. Once again, the markets have given up all of their gains. Right now, they're trading flat with a positive bias, but as you can see on your screen, there you go. We've actually given up all of those gains, almost 9/10% gone for a Nifty. The fall in Nifty Bank is much more sharper. Nifty Bank is off about over 1% from the day's highest point. So yes, the markets have given up all of those gains, not able to sustain those moves. Looks like markets are going in the direction of the shade that Shrishti is wearing today. But let's move on and let's take the next query. This one is from Deepak. He's writing to us from Mumbai. Paytm he has 909 at a price of around 990 rupees per share. Kunal, do you foresee any bounce in this counter?
Well, again, not immediately, but I think the stock has established a major support at this 450 mark. The only concern with a stock like Paytm and such other new age stocks is the bout of selling which comes across from on a regular basis for these names. We've seen reduction in terms of the stake for the stock over the last many months, and I think that's been one of the reasons why you've seen Paytm and such other names going into a correction. So I think till the time that selling is not over, the stock may get into recovery, but then this recovery would be short-lived. I would suggest to hold on, not to average at current levels, and look out for a zone where the stock crosses about that 700 mark. That could be a point where the stock may confirm a big breakout for itself.
Okay, moving on, the next question, Vijay, is coming from Prakash Nayak, and he's holding 374 shares. He's holding over 1,000 shares of Nuvoco Vistas at a price of 374 rupees. He wants to know the outlook of yours on cement sector and how do you see this particular counter going ahead?
Well, I think that first, the cement sector seemingly looks good because there's a huge amount of budget outlay on infrastructure. So government is going to spend in the tune of about 10 lakh crores on roads and bridges and a lot of infra things. And cement is an allied sector, so cement would be benefited. So I would recommend, if at all you want to be in the cement space, be with Ultratech, which looks much better, or a Shri Cement, which also looks good. So Nuvoco, presently, if I look technically at the charts look weak.
Coming from KB Rao, he's writing to us from Hyderabad. Kunal, this one is for you. He wants to know if he can buy IRB Infra at current levels.
Well, I would suggest to wait out for 25 and below. That could be a point where you may look to buy. This could also coincide with the 200 DMA for IRB Infra. So it's a decent chart. The stock had been holding up quite well in the last 3-4 months of this market correction, but I believe that there could be a possibility that maybe 25 could be a better level to buy. So if in case you are looking out for a classic level, then just wait out for that level. Once the stock retests its 200-day moving average and completes this retracements towards 25, then I believe a major correction could probably be over for the stock.
Okay, another viewer seeking an advice on a fresh buy, and he's Bharat. And Vijay, he wants to know, is this a good time to enter BHEL or rather ITC? Your view?
I think that BHEL looks better than ITC. ITC has moved up considerably. So BHEL has the potential, if you buy around here, maybe around 72, it can go up to 88 and 90. While ITC has already, touched, almost 400 levels. So it might correct. If you get ITC around 350, it would be a great level to get into the stock.
All right, that's the view coming in on ITC. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we continue taking your queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let me continue taking all of your stock related queries then. And this one is coming in from Sushil Kumar. He's writing to us from Trichy, and he wants to know about Bank of India. Kunal, 54 buy price is 54, about 300 shares. He wants to know whether he should continue to hold or exit.
I think we should definitely look to hold on to the stock as of now. I believe that the rally which started off in 2022 second half for most of these PSU banking names, they've gone through their share of correction as well as time-wise consolidation. So I think they could now be ready for a next leg on the upside. Possibly in the next 1 or 2 months, I believe that the move could start off for these PSU banking names. So I would suggest to hold on.
Okay, moving on, and Vijay, coming to you, the question is from Rahul, and he is holding shares of Deepak Fertilizers from a price of 802 rupees, currently at a loss. What he should do now?
Well, it's very tough because there's a huge wealth destruction investors are facing. But yes, I think you should keep a stop loss of 550 and keep on holding the stock. There are good chances, as I mentioned, that most of these chemical and specialty chemical and agrochemical companies are now not facing the problem of high input cost. So there is a good chance that these companies start, recovering from here.
One is coming in from Swati Kunal. She wants to know fresh buy levels for Thermax as well as Cummins, and also a target that you can share, but for either one of them.
So Thermax is something which I would recommend because it's just given a recent breakout on the charts. 22, I think 65, 55 approximately is the breakout level on the spot basis for Thermax. So I would suggest that keep a stop loss of 20 to 45 for the stock, and on the upside you could be looking out for targets of 2,400, 410 for the stock.
Okay, Vijay, the next question is from Vijay, and he wants to know your advice on two counters. Firstly, Supreme Petrochemical, and the other one is Praj Industries. Any of these names that you would suggest or recommend for a fresh buy?
Well, I think Petro has consolidated nicely over a period of time. Good chances that it starts coming back. So, if at all you get the stock around 350, that would be a great price to enter. So do not enter now, but wait for 350 to happen. And similarly with Praj Industries, with the ethanol blending thing going on, I think that Praj should be the beneficiary. But the ideal price to get into the stock would be around 300, 310. So if you can get the stock around 310, that would be a great entry point.
Okay, this one is coming in from Anjali. Kunal wants to know, she wants to know if she can buy Glenmark futures right now.
Well, I think that's been a recommendation from my side. I think 2 or 3 days back, 420 approximately is where I had flagged off a call for Glenmark, because my expectation is that the stock is looking quite strong. It's already at 437, so I would suggest to maybe hedge it with a put option. But I think going with the trend is a much more better strategy for Glenmark.
Actually, I should mention that she did mention in the query that it was your call, so which means that she is actually following you very intently.
Thank you for that.
Shristi?
Okay, so let me take the next one in the queue, and Vijay, the question is from Kumar, and he's holding 300 shares of CG Power from a price of 396 rupees. Is that a hold or exit at these levels, because the stock is already down 10% in the past 1 month?
Well, yes, I think it's a good company. Now the ownership has changed, and I think that it has the potential of going up again. The correction was due. It's a great company to have in a portfolio, but I would recommend that just wait till 270 to buy between 260 and 270. That would be a great level to enter CG Power.
And let's quickly kickstart with the rapid fire and take as many queries as we can today. Vinod is asking about Venky's India. He has 100 shares at 20 to 30 rupees per share. Should he continue to hold for the longer term? What's your take, Vijay?
Well, I think that it's in a consumption sector, but yes, the stock has faced with the stop loss of 50.
Okay, Kunal, Umesh is looking for fresh investment in Keynes Technologies. What are the charts indicating?
Recently listed name, but doing pretty well. I would suggest you can hold on.
Okay, this one is coming in from Sandeep. He wants an advice between Sun Pharma, DVs. Which one should he look to invest in the longer term? What's your take on this one, Vijay?
Sun Pharma looks very good, but post correction, DVs also very exciting. So those preferences are better.
Okay, Kunal, the question is from Prashant, and he's holding Persistent Systems from a price of 4,961 rupees. He's currently at a loss. Your advice?
You should look to hold on.
Okay, I have a viewer who's asked about Harsha Engineering, 50 shares at 403 rupees per share. He wants to know what should he do with this counter. Kunal, will you track this one, Harsha Engineering?
Don't track the stock, but I've looked at the charts. It's a weak chart. I think you should look to exit.
Okay, Kunal, Venkateshan wants to know, is this a good time to enter Eicher Motors?
Yeah, it's a good time to enter most of these auto stocks, specifically two-wheelers.
Okay, this one is coming in from one of our viewers. Name is not mentioned. Dhani is the shares, 11,000 shares at 49 rupees per share. What should do? Average or hold, Kunal?
I think you should look to exit.
Okay, Vijay, once again, the question is on Keynes Technologies, but this time the viewer is looking for a fresh investment. He didn't mention his name. So what's your advice on this counter?
Definitely a strict no. No point of getting into such stock, right?
Okay, Subramaniam from Chennai is asking about DCB Bank. Kunal, 50 shares at 128 rupees per share. Continue to hold or look to switch to Federal Bank?
Hold on.
Okay. Okay, but with this, viewers, it's time up on the rapid fire session, as well as it's time to wrap this edition of Buy Now, Sell Now. Kunal and Vijay, thank you so much for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. But as we go, look at the move in the Indian markets and the indices. We are seeing a recovery in
Absolutely, and a good recovery coming in for markets. But yes, we have the whole day left to go. But for now, we will wind down on this edition of Buy Now, Sell Now. Markets are noon to take the action forward.
Yeah.